Welcome back to the Dividend Diplomats YouTube channel, everyone. You got Lanny, Big L, Hollywood Lanny, Big Hulk Hogan over here, and we got Bert the Hurt. We are pumped up. We are amped up. We can't wait to talk to all of you about this undervalued dividend stock to buy.
Smash that subscribe button. Give Bert and I a nice thumbs up. You know the drill. You know what you need to do. We are on the road to 10,000 subscribers. Why? Because we want to keep pumping out content to the millions and millions of dividend investors out there. And this video is going to do just that. Why? Because Bert the Hurt and L over here, we're going to talk about another potential undervalued dividend stock to buy.
And why do we keep trying to find undervalued dividend stocks? We want to reach financial freedom by investing in dividend growth stocks. But man, oh man, is it hard to find some undervalued stocks in this market that continues to hit record highs. Lanny, what was the record that the stock market just hit?
They just closed a hair under 4,400, so they're crushing over 4,300. They finished at around, what, 4360s this past week, Friday, July 9th. We had a couple down days, but the S&P 500 says we're gonna finish strong, baby, setting new record highs, which creates a difficult problem for dividend investors.
Yeah, it does, because we want to put this hard-earned cash to work and get our income growing. And we're not also getting help from our savings accounts either, because interest rates on your cash that's sitting on the sideline also continue to remain at record lows.
It's like when you're climbing the, all of a sudden the market's down and you're like, oh yeah, I'm going to grab the belt. It's Shawn Michaels, Razor Ramon, WrestleMania 10 ladder match. You're reaching up, and next thing you know, S&P is like, we're coming right back with a heavy Green Day on Friday, ladder swept underneath you, and you hit the canvas.
Yeah, but you don't stop trying to climb the ladder. You don't stop trying to get that belt.
You never stop trying.
No, that's the important thing. At some point, you are going to knock your opponent down enough to where you can climb up that ladder, grab the belt, and hear the bell ring and see your arm raised there at the end.
As Bert has tattooed on his back, you can take the dog out of the fight, but you can't take the fight out of the dog.
Yeah, when we hit 1 million subscribers, you will get to see that tattoo. That may or may not exist.
Let's just remember this video.
Yeah, I didn't say it exists. It said it may or may not exist, but you won't know until we get to 1 million subscribers.
So Bert, in this heavy, high-rising market, we want to get to the dividend stock, and let's quickly, before we do, what are the 3 dividend stock metrics we use?
PE ratio less than the S&P 500, payout ratio less than 60%, although that perfect payout ratio is 40 to 60%. And then third, history of increasing dividends at dividend growth rate, where we'll get the 5-year average dividend growth rate and how long a company has been increasing that dividend.
We keep it simple, 3 metrics. If that looks great, we do take a look at the dividend yield as well, because we want to know how much income we're about to get.
Of course, but yield doesn't drive the purchase decision. The metrics do, but of course the yield's just that cherry on the top there.
So we're going to take a trip down to, middle part of almost Ohio. We're going to drive down 77 South after you're on Route 8. For all you Ohio people, give us a thumbs up right now if you know where I'm headed. We're going to Orrville.
Orrville?
Orrville, Ohio.
Orrville, Ohio. Man, we have to take a few backcountry roads to get to Orrville off of 77.
Watch out for the horse and buggy.
But it is a trip Lady and I have taken too many times together.
We have.
Do you know who this company is, everybody? Because if not, we're about to tell you. It is Smuckers, ticker symbol SJM.
With a name like Smuckers,
it has to be good.
It's got to be good. So what good stuff are we about to talk about here today?
Yeah,
Bert?
so Smuckers, we're going to cover with them. Before we get into the metrics, we're going to talk about their earnings release that happened at the beginning of June, where we can talk about some of the metrics, some of their sales growth, earnings growth, all that good stuff. Then we're also going to talk about that big press release that was announced there, where they may or may not have announced a huge dividend increase. So stay tuned, everybody.
So for those of you that don't know Smuckers, you got the jelly, you got the peanut butter Jif, you got Cafe Bustelo on the coffee and espresso. You've got a bunch of animal food products such as Milk Bone, Meow Mix, and then you can slide over, to the Dunkin' Donuts on the shelf, I believe, in grocery stores.
Yep. Big into the distribution of Dunkin'.
There you go.
And what we like about Smuckers and why we keep coming back and where Laney's going with these brands is these are brands that can be found in every household. They're They are recession proof in the sense that you're always going to need to buy peanut butter. You always need to buy jelly. Your pets need to keep eating as well. Because as we always say, dogs got to eat. And Smuckers is there to help you.
And we haven't even mentioned Folgers coffee.
Of course, we saved the coffee best for last, right?
That's right. And Smuckers, currently trading at $131. Bert, this stock, I'll say, is only up 13% year to date.
I know. It hasn't caught up with the market yet, which is up 18% year to date. So they're trailing the returns of the S&P 500. I love consumer staple stocks, Lanny does, and that's why we also love Ohio stocks with great, strong brands, which is why we wanted to talk to Smuckers today. One quick note about the brands too is they've also been divesting some of their other brands too. You've heard of Crisco, you've heard of Natural Balance too. So in addition to building these strong brands and their big pet food division, they're also not afraid to get rid of brands that may not fit their core growth anymore and lock in some of those gains on them.
So cleaning up shop a little bit, focusing on some of the core brands.
Yep. And as shareholders of companies like Kraft that has a brand portfolio that is all over the place with where they are in the consumer goods, it's nice to see a company that will focus on its core.
Ketchup and cheese, isn't that what you usually eat for breakfast?
Yeah, we roll it up too there. I'm kidding, but
they're divesting, kind of like what AT&T did with Warner Media.
Yes, in a sense, slightly different, but they at least announced dividend growth, which we'll get to later.
We're talking to you, brother. You listen up, Jack. We're still staying tuned to you, brother.
Exactly. So let's dive in here a little bit into that earnings release. We're not going to go into full details here.
Smuckers had a great earnings release. We say great because you really want to look at earnings per share. You know, not to say not net sales because of all the divestitures that Bert mentioned earlier. So net income was up on a diluted basis around 4%. Solid on the full year net income.
Yeah, and they had their cash flow from operations, which were up as well. And they continue to pump out a lot of that free cash flow that they're earning to shareholders too. Those are some of the big highlights that we wanted to cover here from the earnings release.
I mean, they're expecting small sales growth, 2 to 3%, but they're also looking at a earnings per share range of somewhere in between $8.7 and $9 per share. Free cash flow of almost $1 billion.
Yeah, so a lot of great stuff that's going to be coming back to shareholders. And with that strong earnings, a strong cash flow, they announced a 10% increase in their dividend.
The hammer, baby.
Yeah, from 90 cents per quarter to 99 cents per quarter. There it is. Yeah, deep from the queue.
Deep from the queue, baby.
Yeah, Smuckers is just crushing it. So think about that with all the noise going on at these divestitures and the strong earnings growth, the strong cash flow growth. Yeah, they are still crushing forward earnings forecast. They said, screw it, we're announcing a 10% increase, more than double the rate of inflation.
As long as Smuckers doesn't join the alcoholic seltzer beverage industry, I think they're going to do just fine.
Yeah, it seems like everybody is, though, so keep an eye out for that, Smuckers.
Yeah, so Smuckers, 10% increase, went from 90 cents to 99 cents per share per quarter.
Yeah, that's exactly what it was. So their yield, we're going to cover the yield, but it's keeping it at a very nice level. So just to summarize quickly, strong earnings growth, strong cash growth, nice outlook here.
Strong jelly.
Yeah, very strong jelly, great peanut butter brands, nice coffee, strong pet portfolio, and a very healthy 10% dividend increase. Lanny, let's run this company through the stock screener.
Let's go. We're going to go tell you why now. After we just discussed the brands, the release, the increase, it's time to get into the metrics. So they're currently trading at $130.85. So for that first Dividend Diplomats stock screening metric of the price to earnings ratio, you take that share price and you divide it by that forward EPS. And Bert, what is that forward EPS that the analysts are expecting?
They're expecting $8.84 per share.
Range.
Yeah, it's on the low end of the range that management was forecasting for the year, which, if you recall, was $8.70 to $9.10. So it'll be interesting to see how great would it be if Smuckers just blew it out of the water and hit the top end of that range. That would be great.
So that equals out to a price to earnings ratio of under 15 times forward earnings, so a 14.8 PE ratio.
Yeah, compared to a market that's hotter than ever, over 45 times forward earnings, that's fantastic for Smuckers.
So Bert, that was the price to earnings ratio. Dive into your favorite metric.
This is my favorite, the payout ratio, which helps measure the safety of the dividend, because after all, you can't pay out more of a dividend than what you earn in the long run. That is just not sustainable. Payout ratio divides the dividend by the earnings per share to help you measure that metric. We said the perfect payout ratio range that we like is between 40 to 60%, and man, does Smuckers deliver right there. with a 44.8% payout ratio. Perfect payout
Perfect.
ratio.
45% payout ratio. You've got an under 15 PE ratio. Bert, this dividend growth. You can hear the beats going, the heart thumping here. Run us through the dividend growth.
5-year average dividend growth rate, 6.41%.
Whoa, that means the last increase was what? Higher?
That would be how the trends work out, right?
So I jumped over that 5-year average, baby.
Tip the cap there to Smuckers with this great increase. And in the earnings release they discussed, they have announced a 20th consecutive dividend increase. So they are on the doorstep of becoming a Dividend Aristocrat.
Wow, we'll still be under 40 when they hit that, hopefully.
Yeah, if things continue trending, which they should because the metrics are looking great, we will have a new Dividend Aristocrat in 5 years, everybody. Mark that date in the calendar.
Guys, if you eat peanut butter, jelly, or drink coffee, give us a thumbs up right now. Keep buying those Smuckers products.
Yeah, so now that we know that Smuckers crushes those first 3 metrics, let's go into that bonus metric. Lanny, what is their new dividend yield after that increase?
So they had a 10% increase. One would think, okay, that's a double digit. Do they have a lower dividend yield? Well, they don't actually. Since they pay out now 99 cents per share per quarter, that dividend right now is looking at $3.96 per year. Over that stock price of just under $131, this leads to a dividend yield above 3% at 3.03%.
So everyone, answer this question. How many dividend stocks out there that you can buy today that offer you a 3% dividend yield, have an average dividend growth rate of 6.41% over the last 5 years, but said, screw the average growth rate, we're going to give you a 10% raise this year. Take that 3% plus 10%. How many other dividend stocks in the consumer staple sector offer that to you?
With the dividend stock like Smuckers, it has to be good.
Fantastic, Lanny.
So how many of you own Smuckers? How many after watching this now has added their Smuckers stock ticker symbol to their list of stocks to buy? Let us know in the comments.
I know I am. I'm not running to buy Smuckers after this analysis, but it's definitely earned a spot on my dividend stock watch list.
It's a spot on the stock watch list.
For sure.
I'm going to keep it on. My wife has this in her portfolio, so we're going to add it to the list of stocks to buy. A couple portfolios that I help monitor and manage, we own them. I think now is actually a good time to maybe add to that current position of Smuckers.
As we talked about in our last video, which described our purchases, we highlighted how we bought the dip when the market gave us the opportunity on one of those days where you just look at the stock market as trading down a lot. To me, this is exactly where I'm going to keep my eye out for Smuckers on those days where you open up and the stock market is just down 2%, just down 3%. If Smuckers matches that, I may just add a share or two to my wife's position.
There you have it, guys. Everybody, please give us a thumbs up. Subscribe to our channel if you haven't already. Hopefully we helped you find an undervalued dividend stock to buy right now in this record-breaking stock market. That was Bert the Hurt and Lanny from the Dividend Diplomats.
Over and out.